Thank you very much. I'm very glad to moderate this panel. So as you figure out during reading this panel, we will solve everything related to regulation in UK, EU, and US during this discussion. So a wide topics. Before lending the floor to the incredible speakers that we have for the roundtable, maybe a short introduction. My name is Stéphane Blemus. I work for White & Case law firm. We are advising various institutionals and startups on capital markets, financial regulatory, and we are very glad to accompany various kinds of actors in the Web3 ecosystem. I will let the floor to Joshua to present herself.
Hi, it's nice to see everyone. My name is Josh Klayman. I've been in the digital asset space since 2015. Before that, I was in leverage finance, and I'm at the law firm of Linklaters. I lead our U.S. fintech efforts, and I'm U.S. head of fintech and head of blockchain and digital assets, and one of our global tech sector co-heads. Outside of that, I am on the board of several organizations, including the Wall Street Blockchain Alliance and.
Maybe louder.
Closer.
Oh, I guess you guys can't hear me. Well, I'll just say it really quickly. I'm Josh Klayman. I've been in this space for almost 10 years. I'm at Linklaters, and I'm U.S. head of fintech and head of blockchain and digital assets, and one of our global tech sector co-heads. I also am on the board of several organizations, including the Wall Street Blockchain Alliance. And now I'll pass it along.
Thank you. So my name is David Sabban. I'm working at the French Treasury in the Ministry of Finance, where I'm in charge of payments and crypto assets. So as such, I have participated in the negotiation of MiCA and the transfer of fund regulation during the French presidency of the EU. And today, I'm also in charge of the negotiation of the payment framework in Europe on behalf of France. So it's been like more than 5 years now that I've been working on the crypto asset regulation at the international, at the EU level, and also at the national level. And I pass the floor to Lisa.
Oh, thank you so much, everybody. It's a pleasure to be here in Barcelona. I'm Dr. Lisa Cameron. I was an MP in the House of Commons for the previous 9 years. During that time, I led the cryptocurrency and digital assets cross-party group in the Parliament, which was the first group in history of its kind. And my mission was to educate the members of Parliament regarding the sector, including myself. There was a steep learning curve, and to make sure that the opportunities in terms of consumer protection, but also economic investment, are realised for people across the UK and those companies that want to trade globally. Thank you for having me.
Great to be here. Gabriel Ibghy. I'm General Counsel with HIVE Digital Technologies. We are a Bitcoin miner. We build, we operate data centers in Canada, Sweden, Iceland, and now we have a new site that we're building out in Paraguay. Within our portfolio, we have 150 operational megawatts. We've recently contracted another 100 megawatts in Paraguay, so we're going to have 250 megawatts within our portfolio, all of which is green and clean power. And we also have a business unit which is building out tier 3 facilities, some of which are already operational, and that is facilitating deployment of AI, HPC, running large language models. So we're a diversified Bitcoin miner running on green power.
Yes, to round this up, I'm Max. I'm not a real doctor, so it's just in law. I'm managing director at TaxBit. We are the world's largest provider for financial compliance in the area of accounting and information reporting. I lead the business here in Europe. I'm also board member at the International Association for Trusted Blockchain Applications and global ambassador of taxation from GBBC. I'm appointed now also as private sector representative at the Business and Advisory Group at the OECD, basically leading the discussions on the crypto asset reporting framework, which will introduce tax information reporting requirements on most crypto asset service providers on a global scale. And it's a pleasure to be here today and to discuss.
Thank you so much for this presentation. As you know, regulation takes a key part in the assessment by various entrepreneurs, CEOs, assessing their crypto asset services. And even more so on a cross-border basis, because as all the services are provided online, it touches various kinds potentially of jurisdictions, countries, and therefore what would be key during this panel is maybe to start by highlighting the main developments from a regulatory perspective in these three, should I say, regions, the EU, the US, and of course the UK. Maybe we'll start with Europe, because as you know, in the EU, they have been the first into the OECD, the first holistic approach with regard to having an aggregated regulation on crypto assets, issuance, and services. So maybe I will leave the mic to David about precisely that major step, which is the MiCA regulation.
Thank you, Stéphane. Indeed, I would say that in terms of regulation, in Europe, most of the job has been done with the MiCA regulation, because now we have a directly enforceable regulation that ensures level playing field in all the member states of EU, and it also ensures harmonization. So, of course, in terms of predictability, in terms of legal certainty, that's something very important. We have also a clear timeline that is given to the actors. They all know when they should be licensed. They also know that when they will be licensed, they will have the opportunities to offer services in all the 27 member states of Europe. So, of course, very significant. And at the end, we have also a very comprehensive framework for the issuance and the redemption of stable coins, for the issuance of crypto assets, for financial services provided with crypto assets. So, of course, it's really a clear and comprehensive regulation that has been adopted and that will soon enter into application. And I may add that when we talk about crypto assets, really on the scale of France, France soon will also introduce a law in the coming weeks clarifying that crypto assets are subject to property rights, in order to say that the holders of crypto assets benefit from the full protection from the property rights when they have crypto assets, even when they are held by crypto asset service providers. So for us, the question is less a question of regulation than a question of implementation. And here we know that there are several challenges at stake. For example, as I've said about the timeline, the actors will have to be licensed at the very end at the 1st July of 2026. So it will take a little bit of time. So this, we know that this will be a challenge with what we call the grandfathering clause for the actors that are already authorized. It would be another point in terms of implementations that would be challenging is the question of all the actors that will actively target the EU market, even though they are not licensed. The thing is that we will be very clear. All the supervisors will be very careful to ensure that the reverse solicitation is very strictly applied, because we consider that when you want to offer crypto asset services to the EU market, you will have to be licensed, you will have to be supervised in the EU as a matter of level playing field and protection of the consumers. And it will be the same regarding stablecoins, the issuance of stablecoins. We have drafted a very comprehensive, very protective regulation for the holders in terms of financial stability. And we want to be sure that when consumers will buy stablecoins through EU-regulated platform, they will only have access to regulated stablecoins in the EU. So something also important. And two other points to mention very quickly: the question of the articulation between the MiCA regulation on crypto assets and the payment regulation. We know that there are some concerns from the private sector. We have discussed a lot with them, and we know that the payment regulation will have to take into account the specific features, the technologies of stablecoins and DLTs. So here we are ready at the EU level to clarify all of this. And last point, because I've been a little bit long, the question of the delineation between crypto assets and financial instruments, because as we are talking about tokenized finance, tokenized financial instruments, it really challenges the traditional boundaries between financial instruments, which which exists for such a long time, and crypto assets, which is more recent. So, of course, at the EU level, with the supervisors, we are very dedicated to bring maximum clarity in that regard.
Thank you so much, David. And now, after Europe, maybe the continent in itself for this new ecosystem, which is the USA, Joshua.
Thank you, and hopefully this time you can hear me. Before I answer, I just want to give a quick disclaimer for, I think, all of us, which is nothing we say is legal advice, investment advice, accounting advice, tax advice, any advice, and these are our own thoughts and not those of necessarily those of our employers or clients. Okay, with that, we've moved from, for the moment, a picture of a very clear, consistent path, comprehensive with the EU, right, and licenses that are available, to a jurisdiction that in many ways is very different, where it is not necessarily clear, it is not necessarily consistent, it is not necessarily comprehensive, and sometimes it's very hard to get licenses that people are trying to get. And I guess maybe I'll just frame this for a moment by saying sometimes it's hard for all of us to know exactly what's happening with the US, because we have, as you likely know, a federal level of government, and then we also have individual state levels of government. And even at the federal level, we have an overlapping, tapestry of regulators that cover digital assets. We don't have comprehensive regulation right now by any single regulator, and there's actually regulatory competition in some respects. So maybe I'll pull back for a moment and just say, if you're trying to think of what the US in general, what our lawmakers and what our regulators may be thinking, when you think of tech in the US, and of course, digital assets, that falls within tech, again, and a lot of other crisscrossing things, our government would say, the important thing to remember is that the US government generally, in my view, is looking at tech and digital assets through a national security lens. So if you're trying to think, will they care about where this digital asset is coming from, whether it's in a game, whether it's, outside? Probably yes, because anti-money laundering, anti-terrorist financing, those sorts of concerns are paramount. And I think that tells you a lot about the map and the mindset. Now, with certain other kinds of industries, including those that are really touching upon digital assets as well, where there's lots of overlap, like, say, AI, there has been a view of, okay, it's a race to the moon, it's also an arms race, and a talent war. And for too long, the US has not really seen digital assets as being the talent war part or the race to the moon part, but they have definitely been concerned about national security. I think that's changing, and in our little prep session before, Gabriel very rightly pointed out that even in Nashville just a couple months ago, we heard some very strong words about making the US the crypto capital of the planet, excuse me. But we'll talk more about that, I'm sure, a little later. What I will say about regulations, just very, very quickly, in terms of potential legislation, there have been a number of acts, including potential federal stablecoin bills and the FIT21 Act, the Lummis-Gillibrand bill, lots of comprehensive, in some cases, market-shaping legislation that could provide express and well-defined roles to certain regulators like the SEC and CFTC. So far, those haven't been passed. Now, some of our big supporters in Congress, like McHenry, will no longer be in Congress after this term. But there is hope, and it's been in the press, that there's going to be a push during the lame duck session of Congress to try and get some things passed. So hopefully, and what that means is, like, after Congress is sort of over, but before the new group of Congress people come in, the new class comes in, that hopefully we can get something passed in terms of whether it looks like the FIT21 Act or some kind of market legislation. Who knows, though? Also, Maxine Waters, who often has been a big opponent of digital assets in many people's views, has been pushing really hard to try and get a federal stablecoin bill signed into law by the end of the year. So we'll see on that front. I will say just very, very quickly, although I'm going to cut this very short, with the SEC, which many of you guys know has been really on a tear for quite a long time, there's a view that, and I won't go into all of it because I know we'll talk about some of this later, but there's a view that perhaps there was a bit of overhiring in the SEC enforcement, right? And raises went up 8%, I believe. Don't quote me on that. But the budget was flat. A lot of the major cases, as I understand it from people who've recently left the SEC, are already out there, although, of course, there may be some in the pipeline. But what this means is that, well, as we know, working through the courts right now, and I'm happy to discuss it later if we have time on the panel, against trading platforms, against other major players are out there. What that means is that if you receive a subpoena from the SEC, you might be dealing with that for a very long time because many people on staff are trying to figure out what they're going to be having their workload be for a long time. Anyway, that's not substantiated. That's just what I've heard. But I'll pass this along now because I could go on forever.
Thank you so much, Joshua. So we have clearly viewed that there have been very different both regulatory strategy and current state of regulatory framework between the EU and the United States. What could be key is also to have the perspective from Lisa about the UK, where there have been various discussion and position by the FCA and also debates currently.
Yeah, thank you so much. So when we started the group in 3 years ago in 2021, there had been absolutely no debates in the House of Commons on cryptocurrency at that point in time. And I remember speaking to the legislators around me and saying, we need to really be learning about this sector. It's coming on mainstream with the public. And a lot of the misperceptions and, people would say, well, we're not doing this in the UK. We don't need to do this in the UK. We went away and did a lot of research, and I came back and said, well, at that point in time now, it's more now, and I can update, but at that point in time, about 3 million people in the UK were involved in this sector. So I had to come back to the Parliament and say, actually, we are doing this. The people are doing this in the UK, but the Parliament has to catch up with the people. And that's why it is so important. There's about 4.5 million now who are involved. So this is not something you can stick your head in the sand with and hope it goes away. So part of the work we did was education. You have quite a lot of technological jargon, I would say, in this sector. It's not my background. I'm a psychologist. I'm the first psychologist to be elected to the Parliament because obviously my constituents thought that our Parliament needed a psychologist, and that's, how I got there. But that aside, it was a lot for me to learn as well. And I would go into meetings where a lot of the jargon was spoken about by industry coming into Parliament. And, I remember they would talk about DeFi, CBDC, fiat. And I remember sitting in a meeting with members of the House of Lords, and someone said to me, why are we speaking about fiat? Isn't that a car? I thought we were here to talk about cryptocurrency. So we had a good number of years of education in our Parliament to even get up to speed with the potential of this sector. And originally we came with a very consumer protection at the core of everything we were doing, which has remained there. It's not a race to the bottom in the UK. However, it meant that it took a bit of time to get debates, to get questions going, to get government to be progressing with bills. And over the past 3 years, since we've been working in the Parliament with the group and with members of Parliament and the House of Lords, we've had the Financial Services and Markets Act come through. We've had some regulation on financial promotions. The new government has come in and continued the momentum, which we're pleased to see. And now digital assets will be classed alongside property rights. So I suppose if we get divorced, we could split them all up, at that point in time. So things are moving. But I would say that we don't have the clarity of MiCA as yet. We're looking at international best practice, and I'm very keen to see how that develops. But we perhaps a bit further along the road than the US, which has, as we've heard, hasn't been as clear as perhaps, people might have liked. So we're somewhere in the middle just now. But the most important thing is that you continue to engage if you're in the UK or even in the EU, anywhere else, with your Member of Parliament, you educate them about why this sector is important for jobs of the future, for the skills for young people coming through into digital technology, and for the economy, because this, we learned, is not just even about a financial revolution in digitalization. It's about art and culture and sport. And I had the pleasure of opening Digital Fashion Week in the UK just a couple of weeks ago. So this is about the way we live our lives, and there are huge strides being made. And the blockchain technology can be helpful for financial inclusion. And with our international aid, I heard from UNICEF yesterday about the projects that are ongoing. But what I would say at the core of getting this legislation through and helping the UK to become a hub is making sure that the parliamentarians are informed and able to have really important debates about why we need to support the jobs coming out of this sector and the technological advancements. So please, my message to you is get involved. It's as much your job as it has been ours in the Parliament to make sure that MPs are educated and understand this sector.
Thank you so much, Lisa. And thank you so much to the three of you for presenting the different approaches that have been adopted in the EU, in the US, and in the UK. What would be also really interesting is to have potentially the insights, the relevant experiences that you had, Gabriel, about precisely another topic, which is potentially the problematic country by country that you've met during your on-the-ground expertise.
Thank you so much. So, Lisa, I really appreciate what you're saying, because we've largely had so many of these challenges in Sweden, in Canada, and really in every jurisdiction we're in. So much of what we do is education and meeting with government and being around the table. And so our approach to every jurisdiction starts off the same. We start off when we're looking for, what jurisdiction should we pick up and move to. First of all, essentially, we're a Canadian company based in Vancouver. We're publicly traded. We're on the NASDAQ. We're on the Venture Exchange out of Vancouver. We're on the Frankfurt Exchange. So we put in a lot of time and energy into the due diligence before we move into a jurisdiction. And when we do, we look for political stability. We look for fiscal stability. We look for large amounts of renewable, usually hydroelectric power at an affordable price. And then the most critical thing that we look for is community support. We want to get on the ground. We want to meet the local community, the local utility, the mayor, different stakeholders, and really get the feeling that we are part of their long-term vision, that we have things that they understand that we could contribute to their community. And if there's that level of understanding, that's when we consider putting in an investment, because what we build is essentially data centers of 50 or 100 megawatts or even more, and that could be an investment of over $100 million if you consider the equipment that goes into these data centers. So we really need to have that relationship, that very close relationship on the ground. And what it looks like is a discussion with the utility on how we, as a consumer, can provide services to them. And that services through demand response. It services through helping them manage their cost, balancing their grid, sell excess power. Essentially, we're the buyer of last resort for these utilities who have too much hydropower. So we permit these utilities to have a green and healthy balance sheet that they could reinvest. And when I talk about stranded power, there's nowhere else for this power to go. It's not going to go from northern Sweden, where we're operating, to Stockholm. So there's just no connection between the two cities. So that's what we look for before moving in. And then when it checks all the boxes, we do move in. We deploy, we build, and what we've seen come up unfortunately, is every jurisdiction has a challenge, and it'll come up in one form or another eventually. So in Canada, one of the things that came up is that the federal government, who is quite a bit removed from the small town, or the small towns which are, involved in the Bitcoin mining, where we have our economic development projects. The federal government comes in and says, okay, we're going to single out Bitcoin. How do we do this? And they managed to do it through tax legislation. So what they did is they changed the legal, essentially they made a legal change which deemed a Bitcoin miner, through a legal fiction, they deemed us not a commercial activity. So what that did is it set us apart from any other business that's doing any commercial activity and saying that we are not. That precludes us from getting back our input tax credits. So every company is getting back their tax credits, and that is how the Canadian government attracts people to Canada. But Bitcoin miners no longer will be. So this is one of the things that came up where we as an industry had to mobilize. All the Canadian miners came together, we're in the same room with Department of Finance in Canada, making sure that this legislation doesn't go forward, educating government, and that process is still ongoing. We're not caught in the net. Through our efforts and essentially the definitions of what is a Bitcoin miner, it gets pretty detailed into the mining process and the pools and the type of pool you're using and whether you're your own pool or you're a joint venture with the pool. So it's quite technical, but that is how the Canadian government tried to dissuade investment into the space. In Quebec, there was another effort to dissuade Bitcoin mining. Initially in 2017, Quebec government invited miners from around the world to show up and mine Bitcoin. They had too much hydroelectric green power, and they wanted to monetize it instead of sending it cheap to the US or to other places where the job creation is in the US. So we established ourselves, or companies established themselves at the time in Quebec, only for a change in policy 1 year later. And the change in policy is because there was zero framework around this invitation. So anyone any entrepreneur, any broker, anyone who had any interest in making some money would put in a request, okay, if I buy this building, how much power could you send me? And the utility would put together a report, and that would go into their future demand calculations. So all of a sudden, the utility thought that they had a gigawatt of power that they needed to deliver, but not one person had a deposit. So they were not serious buyers. So it was a complete mismanagement of this initiative. And so after that year, there was a moratorium. So they could, figure out a framework, a legal framework to make this work better. And they got a Big Four accounting firm to pull together a 200-page tender with all the requirements that a company would need to go through to participate in the green and clean power that Quebec had to offer. No one, not 1 megawatt of projects came out of this tender process. No one participated. No one built anything. Everyone went elsewhere. In Sweden, also, companies like us were invited, and we got a tax rebate to set up in Sweden. I think it was 2 or 3 years later, that tax rebate is now removed. So what we're seeing is, despite all the due diligence in looking for these jurisdictions, challenges come up, legal battles, you better be ready for them, because in this industry, there's a lot of education that we need to do. There's a lot of interviews. There's a lot of there's a lot of work that continues to need to be done.
Thank you so much, Gabriel, for such insight about how building your project would require both analyzing the jurisdiction specifics that may be raised during the assessment and the delivery of your project, but potentially some local requirements that could be also emphasized, analyzed in order to be fully ready to enhance and explain and deploy your project. In contrast to this jurisdiction-specific or local-specific rules, we have seen also in the last couple of years some key initiative in order to foster aggregated somehow worldwide rules related to crypto assets. There was the work by the Basel Committee on prudential treatment of the FATF GIFI on AML rules. And I will let the floor to Max precisely on that international trends.
Thank you very much, Stéphane. I actually took some notes. So I think that 90% of the people are here because they ask themselves, okay, they read regulation of digital assets in the UK versus EU versus US. So the question is really, what is the best country to place your business in, right? So then you have like, does it like, what has the country has the best regulation? Does it even have regulation? Do I care about legal certainty? Because as Gabriel mentioned, from a practical side, we just see that a lot of countries are ever fast moving. We see, like Josh highlighted in the United States, a law by enforcement approach, which leaves a lot of legal uncertainty as well from a business perspective. And ultimately, it's also about taxation, right? What country do I place myself in order to have the lowest tax rates and to make the most gains possible? And this is what we see in the European Union as well. I mean, we now have the markets in crypto asset regulation, but looking at that, it's just like we talk about regulation of digital assets. I mean, the markets in crypto asset regulation is really about issuing and public offering, right? But as David also mentioned, there is other questions, like what about property rights, right? We see in the United States, we see in the UK that they are trying to create a new property rights schema for crypto assets, where it's like a digitally recorded record, like a digital record. Josh will know more about that in the United States for sure. But this is something very important, right? Because like especially if I use that in DeFi and I trade tokenized assets, do I actually claim an asset without any competing property rights on that digital asset? So these are basic questions that need to be answered on a global scale. However, what we see right now, and this is coming back to like the comparing, we see that there's regions, there's certain jurisdictions that implement certain laws, like we see in the European Union with MiCA on issuance and on the public offering part. And then we have the United States that don't really have anything in place right now. They're coming up with certain bills trying to regulate stablecoins, etc. And then we have the UK that is also now trying, the question is, okay, are we going to implement like a MiCA-like regime, yes or no? It's an important question, right? Like a service provider that now will apply for a MiCA license in Europe, they question themselves, can we then also leverage this in order to expand to other jurisdictions, like to the UK? I mean, the UK introduced a lot of additional burdens as well. So after all, it's a very, very comprehensive set of regulation that service providers have to deal with. And we see, like, especially on the registering and licensing part, this is still something very global. It's still something which is really down to individual jurisdictions or like the European Union in this regard. So there is not really a trend of harmonizing these standards internationally. And even within the European Union, I mean, we will introduce MiCA, which allows service provider to passport all across the union. But then again, does it really? I mean, after all, there's AML and tax regimes, and there's certain countries that have more stringent requirements than others. And mostly it's really those AML requirements and those reporting requirements that like push service providers to place themselves in certain jurisdictions. We all know that there is like very, very big differences, right? And so when we come down to these compliance requirements, and this is something we see in AML, we see in taxation, this is something that is more right now trying to be handled on a global scale. I mean, we have seen this with AML being the focus of attention ever since 2014, 2015, 2016 in the Financial Action Task Force, the FATF, which basically also then released the first guidance on virtual asset service providers, creating global standards in crypto regulation. This is something that we now also see being implemented for taxation, not de facto taxation, so meaning like, okay, how much tax do I have, ultimately have to pay in an individual jurisdiction, but really information reporting. So information reporting is being more and more harmonized on a global scale. We have now coming up the Crypto Asset Reporting Framework, the CAF under the OECD, which is often overlooked because it's a tax-related information reporting requirement, and service providers are not really aware of it. But there's actually being very, very fundamental discussions in the context of the Crypto Asset Reporting Framework that are being led right now. And one of them is actually, should DeFi, so should non-custodial exchanges and decentralized platforms be reportable under the crypto asset reporting framework, which would mean that basically they would also have to, like Uniswap Labs, for example, would have to report the transactions of each and every user using the protocol. Because you have transaction-based reporting or aggregate reporting per year. And this is often overlooked. Like I said, it's a framework that no one really cares about at the moment, but will have huge implications. So regulatory trend, we see compliance from the compliance side. There is a standard rolled out globally where there's a minimum standard that most jurisdictions expect service providers to comply with. When it comes down to registration, licensing, still very regional approach and a lot of limits that service providers are facing when they're trying to scale internationally.
Thank you, Max. So for now, we have talked about the states of the current framework on digital assets, but what about the future? And notably about future trends, topics such as DeFi, and also potentially some future or current election grounds on which there could be substantial evolutions. Maybe we will start with some emerging trends, topics, and I'm thinking notably about DeFi, to end about the potential impacts of the future elections, notably into the US. So on DeFi, maybe, David, you wanted to highlight some potential EU evolutions.
Yes, thank you, Stéphane. Indeed, when we look about DeFi, we all see and we all know here that there are significant opportunities in terms of innovation, in terms of modernization of finance. So we see that DeFi really brings a total new innovative ecosystem. And as I often say, DeFi, it's the new frontier of finance. But we also need to be cautious when it's about regulating DeFi. I've heard from certain persons, from certain organizations saying, in EU, we need to have a MiCA 2.0 because we need to regulate DeFi. At this stage, when we have negotiated DeFi, we have said we have excluded DeFi from the scope of MiCA. And France has been very advocated for this exclusion during the French presidency of the EU. We need first to really deepen our understanding, to make the good analysis before regulating DeFi. Because one thing that could really hamper DeFi is to regulate it very hastily, to make it very quickly without really assessing what we should do, what kind of objective we should pursue, and how we should regulate DeFi. Because thinking about DeFi, another thing that we should have in mind is that maybe replicating the whole traditional financial regulation that applies to financial institutions, to banks, etc., might not be the right approach when it comes to regulation of DeFi. So maybe we should think of another way of regulation, of another way of supervision to avoid really killing DeFi. So at the EU level, the MiCA regulation prescribes the European Commission to make a report on that, and we hope that this report will bring some clues, some ways to be explored before regulating DeFi.
Thank you, David. Any other views from potential other speakers on DeFi?
I mean, yeah, I think people always talk about DeFi regulation, but don't really understand what is actually meant by that, right? And this is what the regulator is struggling with as well, because I mean, we throw out the term DeFi and decentralized finance, but what ultimately is decentralized, right? So if we look at MiCA, Markets and Crypto Asset Regulation, within its recitals, basically it states that only fully decentralized applications and systems would be excluded from MiCA. So if I would, for example, right now go into like an individual jurisdictions and then the level of decentralization would be challenged, then every Supreme Court would say this is not fully decentralized. Like no matter what the regulator says, it's written in the recitals of MiCA. So MiCA applies to DeFi. It's a fact because this won't be challenged. Like every single court, I worked as a judge in Vienna at the court, and if I get like a recital, a regulation that I go through, and it says in the recitals that only fully decentralized applications and systems are not in scope, then I would say, okay, but I actually have someone here that clearly works with that protocol, that is related, that makes gains from this protocol, that's not decentralized. So the question is, I'm very pro DeFi, by the way. I'm not like saying, okay, decentralized finance should be like regulated, because I agree that there's a lot of potential coming from DeFi. But it's just we are really struggling at the moment with that regulatory regime, because that was really overlooked by the time of the conclusion of the markets in crypto asset regulation. And also when we look at the discussions that are being held on the level of the OECD that I was referring to before. In the United States, there has been the 1099 DA regime that was approved and concluded last year, basically, or like this year, starting from next year, which introduces transaction-based cost basis reporting for service providers on the customer transactions. And basically the US last minute excluded non-custodial exchanges and decentralized platforms from these reporting requirements, and basically just deferred these discussions to the level of the OECD. And now the OECD was faced with the question: is a reportable crypto asset service provider, does the definition exclude non-custodial exchanges and decentralized platforms? And the question the OECD is giving at the moment: no, it does not exclude them. So by default, they would be in. And then the question again is, if they're in by default, they have to prove that they are not decentralized. But how does a decentralized player prove that they are not decentralized? That they are decentralized, right? So a lot of questions coming up. The question is, how can you approach this from a regulatory angle? A lot of jurisdictions take different approaches, but it's quite a chaos at the moment.
Yeah, I mean, I think there's going to be a lot of bespoke regulatory progress in different jurisdictions, as we've seen, but there will also have to be a degree of shared best practice and interoperability at the end of the day. And I think that that's, what we need to come together and collaborate in the different jurisdictions on. And part of the role that I'm moving forward now is a global network of legislators who are interested from different jurisdictions on sharing best practice, on learning about the sector, and on taking that learning back to their individual parliaments and making progress. And the only thing that I would say very quickly is I think that this is very, very important, not just for those who are operating now, but for the future. One of the most pivotal things that happened to me in the Parliament was hearing from our youth Parliament. The young people came in between the ages of 12 up to 15, 16, and they were learning about technological change. And we had the MPs in the room, the members of the House of Lords, and the young people from the Parliament. And the question came up, who understands Web3 and blockchain technology? Well, all the young people put their hands in the air, hardly any MPs, not any members of the House of Lords. So again, we have a digital generation ahead of us, and I owe it as a parent to make sure that opportunities arise in this sector for young people right across the UK and actually right across the globe. So I think it's very, very incumbent upon us to work together, to collaborate, to make sure that we can increase financial inclusion, that we can reach those who might be left behind in other jurisdictions, and that we can make the best of this for young people's future. And I think that was brought home to me very clearly when the young people came to the Parliament. They're digitally native, and it's the future. It's in your hands as well as it's in ours, and we have to work together to achieve it.
Yeah, I think maybe I'll jump in quickly with the US on DeFi just for a moment. I think one thing to remember is that the SEC and many regulators, including sometimes the CFTC, there's a skepticism that there actually is true decentralization in DeFi, right? And that, this view that perhaps it's DeFi in name only, and actually there's always someone to hold responsible. So even if you look at the IOSCO report, which is global regulators, the lead drafter of that was someone from the SEC, and the CFTC also contributed to that as a drafter. So that's something to bear in mind. What I would say on the positive, and then if you want me to talk about the election, I can too, but just a positive just in general for the treatment of DeFi, I would say in the US, is that we no longer have Chevron deference. What that is, that was something that was longstanding. It basically said that there will be a level of deference to regulators to interpret their own authorizing statute. And so for rulemaking purposes that sort of went more broadly than their actual statutory mandate, there was a deference to the regulators. That is no more due to a recent US Supreme Court decision. So what does that mean? We have proposed rules in the US that would expand the definition of exchange to cover things like DeFi. Who knows whether that proposed rule will be able to go anywhere. So I think that is something positive. Did you want me to touch on the election?
Yeah, you have to conclude on that.
Okay, so this is my view. I think, I'll go through the two positions very quickly, or two possibilities, but I would say in general, no matter who wins, I feel very positive about the trajectory. And I will say that because of Chevron deference, which I just mentioned, also because, the SEC, for all of its regulatory, regulation by enforcement, it's starting to get slapped back a little bit, right? We saw in the debt box case, it was sanctioned for bad actions, with a scathing opinion. We also saw a recent apologetic footnote in a filing related to the the SEC v. Binance case, where the SEC apologized for any confusion caused by the term crypto asset security and made clear that they're not saying that it's the tokens themselves that are securities, rather that those are the subject of the transactions. I would say in certain situations, right? There are certain situations where they do take a different position, and I will say even on the same day as that, they did have a settlement with eToro where they used the term crypto asset securities and said that the token was a security. So your mileage may vary on that. But I say this because, they say the tone that they gave in that footnote, it sounds much more like the SEC from a few years ago when they had this idea, oh, look, current day offers and sales say of ETH, as in the Director Hinman speech, maybe that doesn't involve the offer and sale of a security. Whereas more recently, the SEC had been veering off into this ecosystem theory, which how do you get away from having an ecosystem? So I think there are positive things either way. I will say, former President Trump in Nashville, just a couple months ago, stood up and said if he's elected, he will make the U.S. the crypto capital of the planet. And his running mate, J.D. Vance, has been very, anti-regulation in many respects, not in all respects. So there's a view that there's a lot of positivity towards the treatment of crypto. RFK,
Joshua, what got 2 standing ovations during the speech?
I mean, well,
I was also in Nashville, and Trump made a statement that the first thing he would do when he gets into government is to fire Gary Gensler. And yes, the entire room of thousands of people, 8,000 to 10,000 people, went wild. So Trump, what he did what he always does, he doubles down. So the first thing that a Trump government will do is fire Gary Gensler.
So I agree with that. I would say, though, just it's important to remember that the heads of regulators generally are appointed by the president. So it would be unlikely that Gary Gensler would stay anyway, right, even if he wasn't affirmatively, pushed to leave. However, I will say, moving quickly to the other side, what I've heard from folks who recently have left the SEC in various capacities, unofficially, is that it's expected that no matter who wins, Gary Gensler will not continue as the head of the SEC, which would be very, in my view, great for crypto. Now, who knows if that's true? But Kamala Harris certainly has been seeming to have a more positive view of digital assets. She does say that she sees a future where there are digital assets. There are crypto town halls for Harris now. And I think it's important as an industry that we not place all of our bets behind one candidate, because no matter who wins, we want to have a future and we want not to have disenfranchised anyone, and we want to be able, as Lisa and others have said, to continue to educate, right? And also to try and get movement. But yeah, I mean, another thing that we've seen RFK Jr., who was another candidate, throw his weight behind former President Trump, including with respect to common themes like having a Bitcoin national reserve. So, here we have a candidate who has his own NFTs, right? So on one hand, And on the other hand, Kamala Harris, it's unclear exactly what her positions are, but I think one thing is clear. She appears to be more friendly to the digital asset space than Biden. And I think in any event, we're moving in a positive direction. And I think if anything is true, it's that this election, people are feeling the power of the digital asset space and frankly, the money of the digital asset space. And I feel much better about the US than I have in a while.
We'll conclude on this positive note. I really want to thank these amazing panelists today. I want to thank the EBC organization. I want to thank you to attending this event. Many thanks. Bye-bye.